This is Andrew Stotts of A Stotts Investment Research to talk about Thailand and how I see it's moderately attractive right now. I look at a country from four angles. Let's first start with GDP. What we can see in Thailand is that the GDP growth of 2.89 is moderate relative to the rest of Asia. And we can see that this is mainly driven by exports. In fact, the private consumption component has been tiny. And what you can see is that the private consumption over the last 10 years or so has been the slowest growth in all of Asia. After that, the investment drag is what's bringing down GDP by about 0.7%. Now, if we move on and look at the overall market, what we can see is that analyst consensus is that 2 years of negative earnings growth will come to an end in 2016, and then it will accelerate after that. Now, it's country's moderately attractive because of a dividend yield that's about slightly above average for the rest of Asia. If we continue on to our four elements, FVMR, we can see that relative to the rest of Asia, Thailand is slightly below average, or what I'll call moderate. From a fundamental perspective, it's moderately attractive, supported by good ROE and dividend yield. The valuation, well, moderate multiples are around about the average of Asia. Momentum is poor, both earnings and price. And finally, risk is moderately volatile. If we move on to the sector performance, what we can see is that the top largest sectors, financials was 17% of the market, energy 12%, industrials 11%. And what we can see is consumer discretionary sector was up about 14%, with PTG Energy up about 64%. The worst sector and stock was the telecom sector, down about 12%, and total access communication DTAC down by 25%. So, know it first, get access to additional research and articles that we have, and sign up for your free membership and newsletter. Just go to babinow.com/join. See you there.